Welcome to The Explainer. Today, we're going to tackle a question that honestly trips up millions of people. What is a company actually worth? We're going to explore the secret that separates smart, long-term investing from the chaotic gamble of short-term speculation. So here's our game plan. First, we'll cut right through all that market noise. Then, we'll uncover a secret from a legendary investor, break down the 5 key ingredients for finding a company's true value, and show you exactly where to look for them. And we'll finish up with the one core idea you really need to remember. All right, let's dive right in with something we've all seen. That dizzying up and down chaos of the stock market. It can feel totally random, but what if there's a way to actually see past it all? This, right here, is the fundamental question. It seems so simple, right? But getting this wrong is exactly why so many people wind up buying high and selling low. That number flashing on your screen every second, what does it really mean? Well, the truth is that daily price is often it's driven by emotion, by news headlines, and just plain old herd mentality. These constant booms and busts are like traps, luring investors in while completely hiding what the business underneath is actually worth. So the big question is, how do we find the real signal in all that noise? Well, the answer comes from the guy who practically pioneered value investing. And check this out. Here's the key insight from Benjamin Graham. The guy who was Warren Buffett's mentor. He basically argued that successful investing isn't about trying to guess the market's mood. It's about ignoring all those crazy swings and methodically figuring out a company's true underlying worth, what he called its intrinsic value. And the tool you use to do this, it's called fundamental analysis. You gotta think of it like being a detective. So instead of watching the flashing stock prices, you're on the ground, examining the evidence, the financial health, and the economic reality of the business itself to uncover its true story. And get this, Graham actually boiled it all down to a pretty simple formula. You start with what a company is expected to earn in the future. But then, and this is the important part, you multiply it by a special number, a capitalization factor. Just think of this factor as a kind of quality score for the company. And figuring that out is where the real detective work begins. Okay, so let's dig into that really important capitalization factor. What exactly are the ingredients that go into this secret recipe for figuring out what a company is really worth? So what exactly is this thing, this capitalization factor? Well, it's not just some random number they pull out of thin air. It's actually a multiplier that shows you how strong and stable the business is. A really high-quality, reliable company gets a higher multiplier, which makes its earnings that much more valuable. This is the key that makes the whole formula work. And here they are. These are the 5 key things you gotta look at. You're asking, 1, does it have a real future? Strong long-term growth prospects. 2, is the management team any good? Are they competent and honest? 3, how's its financial health? Can it actually handle a tough time? And finally, 4 and 5, does it have a history of paying shareholders with dividends? And what's it paying out right now? Each of these questions helps you build a clear picture of the company's true quality. Okay, so that all sounds great in theory, right? But where do you actually go to find the answers to those 5 big questions? Where are all these clues hiding? And you know what? The best part is, these clues aren't really hidden at all. You can find them in public documents. The annual report, for example, tells the company's whole story. Financial numbers like EBITDA and cash flow statements show you exactly where the money is coming from and going. And if you listen to what company executives are forecasting, you can get a good sense of those long-term growth prospects. All right, let's bring this all home. If you remember just one thing from all of this, let it be the huge difference between these 2 simple words. This is it. Price is what you pay. It's that chaotic, emotional number you see on the screen. Value is what you get. It's the real underlying long-term strength of the business itself, which you figure out through careful analysis. The whole goal for an intelligent investor is to buy when that price is significantly below the fundamental value. So I'm going to leave you with this thought. The next time you see a stock price flashing on the news, just stop and ask yourself a different question. Is that price just noise? Or does it actually reflect the company's real fundamental value? Answering that question, well, that's the first step on the path from being a speculator to becoming a truly intelligent investor.